It's my pleasure to introduce today David Prentice, Managing Director of Brookside Energy, BRK, on the ASX. Brookside is an ASX-listed oil and gas producer in the world-class Anadarko Basin in Oklahoma in the US. Very favourable jurisdiction. It's a proven production strategy here with Brookside. You're achieving, great things, results for your shareholders. You've got some exciting plans to share around expansion, Dave, supported by a pretty favourable macro environment for oil and gas. So we certainly see some value not priced in here with Brookside, but I'll hand over to you to talk a little bit more about the company.
Thanks, Andrew. It's good to be with you. We've been on an amazing journey. We've gone from essentially a standing start in the Anadarko Basin with a concept that we built ourselves around this kind of area along the basin margin where we felt like we could generate these kind of really good returns. Back in 2015, 2016, when we founded this business, we were really looking for reservoirs that would support good economics, even when prices were down at $40 or $50 per barrel. And 10 years since we founded the business, we've seen the highs and the lows during that period. So it's been a great journey. We now find ourselves, we're 9 wells in. We've strapped together 4 years of sort of 20 million in EBITDA. All of that capital that's come out of those successful 9 wells has been reinvested into the business and has now established us with a fantastic platform to grow from. Enormously rewarding to come up with a strategy, execute it, and then now find ourselves in a position to be able to roll out the growth. And important for your listeners, this is not an exploration story, this is an exploitation story. So, we know the oil and gas is there. We had a theory around how to most efficiently get it out of the ground, and we're executing on that plan.
Yeah, fantastic. Well, I think that's what's unique about Brookside. It's a proven model that you've demonstrated historically. You've had some great results. I mean, one highlight for investors would have to be the strength of your balance sheet. At the moment, you've achieved a return of capital to shareholders. I think cash on hand is about $14.5 million at your last quarterly. You've got a credit facility there. Looking ahead, sort of, what are the sort of options to scale now? What can investors sort of see in the development pipeline?
We're just in this really unique opportunity where what I describe as our sort of triple re-rating, situation for the company, having built that solid base to work from, those first 9 wells, which were our reserve definition wells, and the production and the experience that's come from that. Executing those projects, efficiently, and the platform that's created now leaves us in a situation where we can ramp up production and drilling in the right pricing environment. And we're obviously, with recent events in the Middle East, it's starting to look like the timing is perfect. So if you think about those re-rating opportunities, we feel like there's tailwinds created by the macro situation that's unfolding at the moment. There's a real opportunity here in terms of a valuation mismatch between our US peers and the fact that we're listed here in Australia. So we're working on a strategy to address that. And then finally, it's sort of going back to first principles and saying, okay, we had so much success in SWISH, that's set us up for this platform. Can we grow that along, in the Anadarko Basin, using our expertise to really build the scale?
Yeah, fantastic. I mean, historically, you've had some great numbers come out. Let's talk a bit more about some of those metrics. What can you tell us about, your recent production and how you're kind of going to carry that forward into the same process?
Yeah, so like I say, we built this business from scratch, and so we've gone from no production to sort of I think the peak production kind of reached 4,000 BOE a day. But in terms of averages over sort of a 12-month period, last year averaged 1,800 BOE a day for the entire year, and it's those kind of numbers that really support and I guess the low OPEX. And the very good pricing that we get for the product that we produce underwrites the fact that we're able to produce these positive cash flow numbers, and then that enables us to then get on with what's next.
And I think leading on from that, not only that structure around low OPEX, his great well results recently as well. I think with that we're starting to see, as you've mentioned previously, a bit more interest from the US as well. We're starting to see some new investors take interest, and what's driven that introduction of US investment?
2 parts of that question, I guess. One is that it's quite unique for a small Australian E&P company to be able to execute on these wells and bring them online. We're talking about sort of 90-day cycle times from spud to, from starting to drill the well to when we get our first cash flow. So this is a repeatable, something that we've now demonstrated to ourselves and our shareholders that we can bring these wells online successfully and get really good production results that are in line with what we were expecting pre-drill. So that's been really rewarding, and it makes us stand out from our peers in terms of that execution part of the business, measuring and managing risk. We really pride ourselves on that. But the really exciting thing for me was that, a bunch of US investors who follow drill results in the Anadarko Basin, were watching, what we were doing, watching what our peers and our neighbours were doing down there, seeing these fantastic well results, and then becoming shareholders of the company. So for me, that was the catalyst for saying, okay, well, if we've got this deep capital markets in the United States, we've got people who understand our industry, who are already familiar with our well results. How do we capitalise on that?
And we'll come back to that because another exciting piece of news you've got to share coming up on that.
Sure.
But before we do, you've had a 4-year development plan across 4 DSUs in the SWISH area of interest.
Yep.
Potential 5th coming online.
Yep.
And you've now got your drill pad out there ready for two wells, as you spoke about.
Yes.
What's the sort of update for that current drill program?
That kind of concept of moving from what we would call reserve definition drilling, where we're drilling one well at a time to really kind of map out the size of the prize here. Then moving into sort of pad development, which is, what we did with our FMDP project, where we drilled 4 wells at once, which is really a pilot study for how if you were going to go into full field development and really develop up all of the inventory that we have in our kind of 12.5 million barrels of oil equivalent in reserves. That was the blueprint for how you would do that. So the next cab off the rank is our Sabres and Whalers project, which is just about to get underway. So we've built the pad, and we're building out all the production facilities and all of the surface stuff. So regulatory's in place, everything's ready, and we're just waiting for the rig to finish the current well that it's drilling for one of our neighbours. That's when the rubber hits the road, right? It's exciting time. We're drilling 2 very big wells. The news flow will be immense from that. We're drilling. We get a sense of what the reservoir looks like while we're doing that. We then obviously go ahead and complete those wells, and then we get the flow back and the excitement around that. So it's a great time to be in the business.
Terrific, yeah. And I mean, again, you're fully funded at this point. You've had a tried and tested, really efficient production model. So you must have, great confidence coming in to take on this new project. Yeah,
definitely. As I said in the opening, this is about exploitation, not exploration. So basically, we understand, we know what the reservoir looks like down there. We've now got 9 wells down, and we know, how to drill these wells and how to bring them online. So really, this is about execution, right? So these are large engineering projects, and so there's a lot for us to focus on to make sure we get it right, and that's around cost control, timing, and all of those sort of things. So it's delivering these things on time, on budget, and then Mother Nature will do what Mother Nature does, and hopefully, if we can maintain our track record, that'll be a pleasant surprise for shareholders.
For sure. And just, for people's understanding outside of oil and gas at the granular level, just the quality of this area, the SWISH play in the Anadarko Basin, and the sort of the quality of the product that you're taking out. Yep. Tell us a bit more about how that stacks up.
Yeah, so in terms of the Anadarko Basin and the particular area that we're in the southern part of the basin, it's got a couple of things going for it, right? I guess the sycamore formation and the woodford formation down in that area are particularly thick. And that thickness and the quality of the reservoir rock is what's driving these really good well results. And that was really what, I guess, captured the imagination of some of these US investors when they started to see these initial production rates and started to say, well, these wells are going to return their capital really quickly. That's a key driver for success. So, so that's obviously, we're very pleased that, in terms of our geologists and our reservoir engineers being able to identify the opportunity, and then we've been able to execute and bring these wells online. So that's kind of the first part, is the quality of the rock. Beyond that, we're sitting in an area where there's pipeline access, there's refinery capacity, there's natural gas processing facilities everywhere. So, we're in the middle of an old oil field, and so we can tap into these things, which is so important from a cash flow point of view, because when we take these projects on, 90 days from when we start drilling to when we start to see, our first cash flow. So that's key to success. And I think finally, the well results have been in line with what we expected. And this particular area in the southern part of the Anadarko Basin, probably the hottest area in the basin at the moment. And so we've gone from a concept that we developed to now being surrounded by some of the most successful larger E&P companies in the state, and that's a direct result of the quality of the wells.
In terms of expansion now, we've been following the story for a while. Excited to see the opportunity now to scale up the Riverbend project that you've had underway for a little while,
yep.
Which is going ahead in leaps and bounds. Tell us about that and the way it's developing.
Yeah, this is a massive initiative for the business, because this is kind of us saying to ourselves, growing up as a business, to say, okay, we successfully identified this SWISH opportunity. If we apply the same recipe elsewhere along the basin margin, can we replicate that success in a whole new area and add some scale to the business? So we identified this Riverbend area, and we're right back in that kind of early leasing phase at Riverbend. So it's exciting. We're putting together the acreage position, and so in terms of next steps, it's building out the acreage position between now and the end of this calendar year. Hopefully, we'll be in a position towards the end of this year to be looking to do our first reserve definition well out at Riverbend, which will be obviously another strong catalyst, because people will be going, okay, it's following the same recipe that we did in SWISH, and so you get success, then people can see that there's a pathway to add some significant reserves to the business. So that's exciting. And
Brookside has sort of taken the time to identify that area, Riverbend, based on the philosophy you've had previously in identifying these zones.
That's right. So that's a key part of our success, is the fact that we have a strong technical team on the ground in Oklahoma, strong relationships in the field, and a really, really good understanding of what drives success in the basin. The basin is unique in that there's a lot of data. There's been oil and gas exploration and production for 100 years in the Anadarko Basin. So there's an enormous amount of data, and so we take advantage of that data to then identify little areas that maybe have been overlooked by the bigger guys that are bite-sized for us, that could add real meaningful scale to the business.
And leading back to sort of that exposure to US investors over there that are looking at these projects, and exciting news, and I'll let you tell the story, but I understand you've got an ADR listing coming up in the US in coming weeks on the New York Stock Exchange.
Yep.
You've seen some increased interest from investors in the US. What does that sort of mean? Why are you starting to see that interest from those guys, and how will this ADR listing help the company?
Yeah, so look, I guess the kind of the driver for that for me was I started to see some North American investors coming onto the register, and that obviously piqued my interest, and that was really driven by I guess the oil and gas investors in the US who follow the data, so they're watching what's happened. All of the well results are public information, so they're published on websites in the US, and so savvy investors are following those well results, and when they see outliers, so wells that are performing better than average, they then focus in on, okay, so how do we get exposure to this particular new hot area? And so we started to see some North American investors on the register. I reached out to them to welcome them obviously on the register, but I also wanted to understand, what was driving that decision. And the feedback I got was, look, we're kind of the pioneers. We're the people that follow the well results and are happy to take the risk of investing on a foreign exchange, but behind us is an enormous wall of people who maybe don't do that. But if you had a security listed in the United States, then that would give you a really good beachhead to market from. And that was really the genesis of the idea and what kind of got us busy working on it.
Well, as we've seen from some other ASX listed companies who've gone down the route of an ADR listing, it's certainly a benefit. It allows US investors, in this case, to get exposure to the company without that need to go into a foreign market, which will suit a lot of people, as you've said. We've seen, I think, in the critical minerals rare earth space particularly, we've seen some success in people using this strategy. So, I think it's a good one for the company. In terms of the macro environment at the moment, a lot of geopolitical tension in the Middle East, certainly drawn some attention to the market. How does that stack up in terms of the runway for Brookside?
Yeah, so look, I think there's two things there. There's kind of the short-term kind of benefit that we get from obviously higher prices delivering, windfall cash flow over these 3 months now that we've seen these remarkably higher prices. So that's obviously a positive. That's also driving some retail sentiment around the sector. So, you're starting to see, more people looking at the business, and, that drives sentiment. Bigger picture, I guess what we're looking for is hopefully to see some stability in that forward curve. So, we're looking for that sort of, $75 to $85 kind of, balancing out in the back end of the curve. That would be the green light for us to say, okay, well, now is the time for us to roll out a much more aggressive development strategy rather than the kind of, the measured kind of approach that we've had so far. So it's exciting because, we're seeing, I think we're starting to see capital rotating out of, out of some of these, sectors in the US that have been so popular for so long into hard assets, and we're starting to see evidence of that. And this price action in the commodity space is really really helping. So that's good tailwinds, at a perfect time for us.
And as we all know, it's not something that happens quickly or straight away, does it? It's going to be a bit of a process now after this adjustment of oil prices, and it's a longer term play, isn't it?
Yeah, for sure. That's right. I mean, what we're really focused on is what is the strip telling us about, the forward strip telling us about 18 months to 2 years out, because that's the signal for us to say, once we commit to these, to a development program, it's not something that you're going to take on lightly. You're developing precious inventory in the hope that you're delivering it into the best pricing environment that you possibly can. So, you don't want to get that wrong. So we're conservative, but we're really encouraged by what we're seeing so far.
Yeah, excellent. And I think some of our sort of bigger investors that are starting to, move out of that and into that asset play, looking at this type of opportunity, it's that 18-month forward curve that they're interested in.
Yeah, for sure.
Yeah.
And I think that the, what we're seeing in the Middle East now probably bakes in a little bit of a kind of a, semi-permanent premium in prices, because, people have now seen that, what kind of, what this kind of activity does for volatility, and I don't think that gets unwound really quickly, right? So certainly we'd expect the volatility to come out, but we think prices will be higher for longer as a result.
I mean, speaking of prices, looking at you at some of your peers, it seems like a pretty deep value opportunity here. Looking at others around you, tell us a bit about why this is a good investment now, and why the market hasn't priced in what you guys are up to.
Yeah, so I think we're in a unique situation in that we're really we're in quite a shallow capital market here in Australia. And we're at the shallow end of a shallow market, right? So small cap oil and gas stocks in Australia are typically underfollowed anyway, and particularly ones that are in production and aren't necessarily kind of looking at that kind of big exploration type risk, that are underfollowed. And so what that's resulted in is us trading at a deep discount to our US peers. So, things like enterprise value to EBITDA, for example, we're at sort of 1.2 times versus our peer group would be, 4.5 to 5 times. Yeah. Dollars per flowing barrel, we're at $10,000 to $11,000 per flowing barrel. Our peer group would be in the mid 30s, and probably higher given where pricing is now. So, and on reserves, we're trading at a steep discount. So that, all of those things, are, I guess the ADR gives us the tools to be able to get out in front of a much deeper pool of capital and explain to people. And we think that's going to be a really good, important part of how we close that gap.
Yeah, certainly provide more visibility of what you're up to as well.
Yeah.
And, with the benefit of even better margins with this consistently.
Absolutely.
Better oil price. For investors looking at the company, broadly, what are the catalysts that they can expect to see in the near term coming up? We've talked about some development, some expansion. You've got a fair few exciting bits of news flow ahead. What should people look out for?
Yeah, absolutely. So look, I guess it's starting now. It's we're entering a period of very rich news flow as now, and it will continue on right through to the end of the calendar year and beyond. Specifically, in the short term, we've got obviously drilling, which is fantastic. So, heading a couple of weeks away from spudding the Sabres and Whalers wells, which is our next kind of pad development. Very exciting. That's obviously lots of news flow around the drilling, and then the completion, then the flow back, and then the actual production results. That will have a material impact on our production. So that's exciting. Something for investors to keep an eye out. We're obviously also executing on the land strategy out at Riverbend. That's also exciting. We're knocking on doors out there, putting that acreage position together with the hope that towards the end of this year we'll be in a position to drill our first reserve definition well out there. And then finally, the ADR listing. So, we're about to, get ready to file our document with the SEC, and that will be the catalyst for us to be able to kind of move forward with the listing and then get out there and start doing some marketing.
Well, I mean, some pretty compelling results. You're in a unique position. You're cash flow positive. You're producing ADR listing coming up, as you said. Some great development and scaling ahead. It's an exciting time. We're certainly seeing the sort of disconnect in the value there, and we're looking forward to staying on the journey with you guys. So, for everyone out there and our listeners, if you'd like to hear more insights and stay across the story, get in touch with us at Barclay Pearce Capital. Jump on our chairman's list for updates. And David, thank you very much for joining us.
Thanks for your time.
Appreciate
Andrew.
it. Thank you.